Imagine you would have invested in Marathon Digital, for example, a bit over a year ago. The stock was trading at $2.38 and currently the stock trades for more than $40. Of course, not all stocks will give you 5-fold or 10-fold returns. However, even if only a few cheap stocks double, it's likely to have a meaningful impact on the overall portfolio. So let's talk about 6 cheap stocks that are trading for less than $10. Their low price isn't their only appeal. These stocks seem to be undervalued and positioned for a strong rally in the next few quarters. And I will go one by one and explain why these stocks are a buy and why I think they have a promising future. And the last one as a little special if you don't want to invest in crypto, which I recommend you do. I mean, invest in crypto is a good idea, but if you don't want to and you feel safer with stocks, then this one might be a good deal for you. So stay tuned. But with further ado, let's get started with the first stock that costs less than $10 and has a lot of growth potential. Kinross Gold with the ticker KGC. Among gold mining stocks, KGC stock looks attractive after underperforming in the current year. While there are talks about a relatively early rate hike, I am bullish on gold for 2 reasons. First and foremost, the Delta variant and its economic impact might delay the rate hike. Furthermore, even if the interest rates trend higher, real rates are likely to remain negative for an extended period. Gold can therefore remain in a long-term uptrend. Specific to Kinross Gold, I like the fact that the company is positioned for production growth in the coming years. Kinross has guided for production of 2.1 million ounces for 2021. However, production is expected to increase to 2.7 million ounces in 2022 and further to 2.9 million ounces in 2023. Therefore, Kinross will benefit from higher gold prices coupled with incremental production. It's worth noting that the company has a total liquidity buffer of 2.2 billion of the second quarter of 2021. It's massive. And further, for the last quarter, the company reported free cash flow FCF of 183 million. This indicates Kinross has ample financial flexibility to finance capital expenditures. KGC stock also offers an annualized dividend of 12 cents, which translates into a dividend yield of roughly 2%. Not bad. And dividend growth is likely in the next few years as production upside translates into higher free cash flows. Second one, Hecla Mining with the ticker HL has the largest reserve and resources of silver in the United States. Additionally, the company is into gold mining. Hecla has been reporting robust financials. For Q1 2021, the company clocked sales of 280 million and an EBITDA of 84 million. Importantly, the company also reported 54.4 million free cash flow for the quarter. This implies an annualized FCF potential of more than 200 million, folks. From a credit perspective, Hecla reported cash and equivalents of 181 million with a total liquidity buffer of more than 400 million. The company is well positioned to accelerate exploration and production investments. The company's net debt to adjusted EBITDA ratio has also declined to 1.2 as of June 2021. It's also worth noting that Hecla Mining has an attractive all-in sustaining cost for gold and silver. If precious metals trend higher, the company's FCF is likely to swell further. Even at the current levels of gold and silver, healthy cash flows are likely. Another important point to note is that between 2013 and 2020, the company's silver reserves have surged by 250%, folks, to 188.4 million ounces. For the same period, gold reserve has increased 645% to 2.5 million ounces. Clearly, with a healthy reserve life, the company is positioned for sustained growth. Let's have a look at the third one. Cronos Group with the ticker CRON. With the potential federal level legalization of cannabis on the horizon in the United States, the sector is really appealing. According to estimates, the US cannabis industry is expected to be worth $41 billion by 2026. Additionally, there are opportunities for growth in Canada and Europe. In the context, CRON stock is worth considering. Its shares have remained almost sideways in 2021, and an upside seems available from the current levels around $6.60. One factor that makes Cronos attractive is its wide portfolio of products. Currently, different brands focus on wellness, adult use and CBD. The company is already present in the United States, Canada, Germany, Israel and Australia. These markets have the potential for high growth in the coming decade, I believe. And for the first half of 2021, Cronos reported healthy revenue growth of 54% year over year to 28.2 million. For the same period, the company reported an adjusted EBITDA loss of 86.3 million. Cash burn is unlikely to be a continuing concern if the company growth accelerates further. Cronos has a robust cash buffer and the backing of Altria with the ticker MO. And in my last video, where I was talking about 5 dividend stocks that pay me 1k dividends, I mentioned Altria already as a great dividend stock in case you want to check it out. And another important development. PharmaCann seems to be planning a US initial public offering IPO at a valuation of more than 1 billion. Cronos has a 10.5% stake in the company, which is focused on medical cannabis. There is a potential for significant value creation from PharmaCann in the next few years. Fourth stock, Transocean with the ticker RIG. But Björn, offshore rig services providers were among the worst hit when the pandemic drove oil prices lower. Not so fast, folks. With Brent oil remaining firm above $70 per barrel, a gradual recovery is occurring in the sector. RIG stock is one of the best cheap stocks from the offshore drilling sector. Its shares have already surged by 194% in the last 12 months, and further upside seems likely as order intake accelerates. As of Q2 2021, Transocean reported an order backlog of 7.4 billion. The front-end loaded backlog ensures clear revenue visibility for the next 12 to 24 months. Additionally, order intake has been robust in the recent past. For example, the company won a 252 million contract for a new built ultra deep water drill ship. At the same time, as industry conditions improve, new orders are likely to deliver a higher EBITDA margin. For the first 6 months of 2021, Transocean reported operating cash flow of 249 million. It's likely that OCF will improve further in the coming quarters. Transocean also has a cash buffer of 988 million and an undrawn credit facility of 1.3 billion. Therefore, the company's credit metrics seems to be witnessing a gradual improvement. And now we come to my favorite and where I am invested in as well, Paysafe with the ticker PSFE. And in January 2021, PSFE stock touched a high of $19.57. However, the stock has subsequently been in the correction mode at current levels around $8.80. The stock seems, however, ready for reversal. Even as PSFE shares trend lower, the digital wallet solutions provider has been an acquisition spree. In August 2021, the company has made 3 acquisitions, and the company's latest purchase is via fintech, which is likely to accelerate the company's growth in Germany. And just yesterday, Paysafe expands Betfred USA Sports partnership through income access deal, which is huge for Paysafe in order to generate income. However, for the current year, Paysafe has guided for revenue of 1.54 billion and an adjusted EBITDA of 488 million. This would imply a healthy EBITDA margin of 32%. Paysafe is also a proxy play for the iGaming sector, which is growing at a healthy pace. The company has a relatively high leverage. As of June 2021, the company reported a net debt to adjusted EBITDA ratio of 4.3. However, I don't see this really as a concern, as Paysafe has been delivering strong profitability at operating level, and debt servicing is likely to be smooth. And another long-term growth driver for Paysafe is likely to be the cryptocurrency segment. The company already has its digital wallet live on 30 crypto exchanges, with 37 cryptocurrencies available for trading. Overall, with a big addressable market and visibility for steady growth, PSFE stock is worth buying, I am telling you guys. And now, let's have a look at the little special I promised you. If you don't want to buy crypto but would like to invest in a stock that has something to do with it, and the name is Bitfarms with the ticker BITF. As crypto is increasingly adopted and Bitcoin trends higher, investors can profit with BITF stock. In the last month, the stock has trended higher by 28%, with room for more upside as the company aggressively expands. Currently, Bitfarms has one of the largest mining operations in North America with 69 megawatts of built-out capacity. The company expects this to increase to 168 megawatts in 2021 and further to 210 megawatts in 2022. This positions Bitfarms for strong growth over the next few years. For Q2 2021, it reported revenue of 36.7 million and an adjusted EBITDA of 23.8 million. As the number of bitcoins mined increased on a quarter-to-quarter basis, the company is likely to have ample financial flexibility. In August 2021, the company also announced an at-the-market offering. Bitfarms intends to raise 500 million through this move, which will further boost its liquidity position. I also like that Bitfarms is gradually moving toward utilizing renewable energy for mining operations. As of May 2021, the company had mined 1006 bitcoins with hydroelectricity. Overall, BITF looks appealing at the current levels, around $5.95. I would not be surprised if the stock doubles within the next few quarters. Well folks, that's it for today, and before watching another video, let me know in the comments what you think about these stocks and if you are already invested in any of these. I hope you liked the video, and if so, please give it a thumbs up. Have a great day, and as always, stay focused and don't get greedy. See you all next time.